with us today doing the updated introduction to insurance, we have Julie Walsh and Eric Cormany from OCI. We used to have Sue Azalara do this part of the presentation, but she has retired, so we've got some new faces doing the presentation with some updates, and I think that they are good updates. So this is going to be really exciting, especially for the folks who've seen this content before. Do you guys, I don't have your titles in front of me because now I'm sharing the slides. If you want to introduce yourselves with titles, that would be great, and then we could get going.
So I'm Julie Walsh. I'm the senior attorney at the Insurance Commissioner's Office. I have spoken with you periodically over the years, and I was the attorney that was in place when the Navigator and the CAC regulations and laws went into place. Our goal today and tomorrow is to give you the information you're going to need in order to take your exam and become CACs and navigators.
And my name's Eric Cormany. I am the senior health team lead for the Health Division Consumer Affairs Market Regulation here at OCI. And I will now continue or proceed with our slide deck that we put together. This is called Introduction to Insurance. And if we move to the second slide, that we have our mission at OCI statement. The mission of the Office of the Commissioner of Insurance is leading the way in informing and protecting the public and responding to their insurance needs. So the Office of the Commissioner of Insurance mission statement provides the context in which OCI goals and strategies are formulated, depicts the scope and direction for the agency, and it provides the framework within which decisions will be made regarding programs, proposed legislation, and rules and administrative goals. OCI developed this mission statement to affirm the direction of the agency as a regulatory agency, additionally to emphasize its role in information gathering and dissemination. The mission statement also reflects the management philosophy in OCI to place primary focus of our programs on protecting and serving the public. Next slide, please. So the Office of the Commissioner of Insurance was established in 1870. So it's been around for 150 years, and OCI performs a variety of tasks to protect insurance consumers and to ensure a competitive insurance environment. Major functions of our office include reviewing insurance policies that are sold in Wisconsin to make sure they meet the requirements set forth in Wisconsin law, conducting examinations of domestic and foreign insurers to ensure compliance with Wisconsin laws and rules, monitoring the financial solvency of licensed companies to make sure that consumers have the insurance coverage they expect when they need it. Also issuing licenses to various parties involved in selling and marketing insurance products, assisting insurance consumers with their insurance problems, researching special insurance issues to understand and assess their impact on Wisconsin, providing technical assistance on legislation and promulgating administrative rules to interpret insurance laws, creating and distributing public information and consumer education pieces to educate people about insurance, and operating a state life insurance fund and a patient's compensation fund, ensuring that healthcare providers have medical malpractice coverage. Moving on to the next slide, powers and duties of the Insurance Commissioner. So the office protects and educates the public, and we attempt to ensure the insurance industry meets needs responsibly, adequately, and even-handedly. We achieve these duties through regulation, examinations, audits, and complaints. The Commissioner's general duties and powers include being responsible for administering and enforcing the insurance laws of Wisconsin, acting as promptly as possible. The Commissioner and the office possess all the powers specifically granted or reasonably implied by the statutes. This enables the office to perform the duties necessary to enforce the law, including adoption of rules. The Commissioner is required to examine every domestic insurer, which is a domestic insurer is an insurer created and organized under Wisconsin law. And we're also, the Commissioner is also required to examine every licensed rate service organization as well. Next slide, please. The general powers of the office and the commissioner are to administer and enforce insurance laws and regulations, issue orders, require licensees to respond to inquiries and provide reports, power to examine licensees, rehabilitate and liquidate insurers. All of those that are considered to be doing the business of insurance are regulated and require a certificate or license. Wisconsin Statute 601.41 grants rulemaking powers enforcement proceedings. The commissioner has the authority to require from any person or company subject to regulation under Wisconsin insurance law the following: statements, reports, answers to questionnaires, and other information, along with a full explanation of programming of any data processing system, computer, or other system in use. Next, please. This slide is titled Statutes and Rules. It discusses general statutes and administrative rules, going over commissioner responsibilities, licensing, financial solvency, marketing, and insurance contracts. The commissioner is granted broad authority to regulate the insurance industry, balancing consumers, insurers, and legislative requirements. The legislative note to the introductory section of the insurance statute states, insurance is an area of free contractual activity, except as restricted by the insurance code. This freedom to contract allows a free marketplace, and it's the responsibility of OCI to monitor the marketplace to maintain a level playing field. Next slide, please.
Is Julie talking right now?
As soon as I unmute, I remute.
Oh,
How's
there-
that?
you're good now. You are excellent now. Thank you.
So again, this is Julie Walsh. I'm the senior attorney at OCI. And the body of insurance statute is really captured in Wisconsin Statute 601.01. The slide in front of you has the base requirements and duties and powers that this office does. So it's when you bring it down, it kind of comes to three main prongs: balance of solvency of our insurers, fair and equitable treatment of insureds, and a legislative direction and oversight. To have the ability to have freedom of contract and freedom of enterprise, it requires a level playing field that's accessible and understandable in contract terms. Next slide, please. So one of the main powers we have is to take enforcement actions, but we must do so as an administrative agency through administrative hearings. This means there's a neutral judge who hears facts and evidence and renders a preliminary decision, and a final decision is issued by the commissioner. Whenever somebody fails to comply with the insurance law, regulation, or order, the commissioner may start a legal action directing the person to comply with the order, restraining the person from further non-compliance, and we may use tools such as forfeitures, which are fines, or license revocation in extreme situations, suspension, and then we have other civil penalties like disgorging themselves of any benefit that they gained. And to the extent we can also refer for criminal prosecution. This includes navigators and as licensees. So if we have issues or concerns that arise with our navigators, you will have a right to a hearing. So if you fail to comply with some of the duties and responsibilities, we're going to try to always gain compliance is the goal, not to be a penalty enforcement agency, but really a compliance, because when everyone is in compliance, then we have a level playing field and the marketplace is going to work much better. Next slide. So as Eric mentioned, one of the responsibilities for our office is licensing. We license insurance agents, we license navigators, insurance marketing, MGA programs, third-party administrators, and we call them EBPAs, Employee Benefit Plan Administrators. And the Bureau is the first line at looking at these qualifications of these individuals who are wanting to interact with our consumers. So one of the main things that we're looking for is behavior that in past may question the ability of this person to be able to act appropriately when they have confidential information. So we're looking for trustworthiness and competence. Trustworthiness, that they're going to hold the information that they gain from a consumer in trust and maintain it confidentially, use information to help the consumer, not to do personal gain, but also to be knowledgeable, to be competent in the material you're sharing. So this CE and the other ones that you are learning about are gaining some of that competence. Wisconsin has a really strict code of conduct because of the amount of information, particularly with health, that is critical. You're going to know their budget. You're going to know their finances. You're probably going to see some information on their bank accounts or their social security number when they're trying to sign up for insurance. All those things are your responsibility to keep private. If you fail to do that, then we will help make sure that you comply with those requirements. That's also part of your federal training, not just state. Next slide, please. So when does somebody need to be licensed? Anytime a person wants to solicit or negotiate or advertise or sell insurance in the state, they must be licensed, be it the company or an individual. The commissioner may exempt certain classes of people, but we don't do that very often. This is the main point so that we can make sure everyone who is interacting with our public again are trustworthy and competent. So here are a couple examples. I want you to think the answers through to yourself and then I'll answer them. So a person who incidentally advises other persons about insurance, needs and coverages during a normal course of their non-insurance business, and who receives no direct or indirect compensation because of the transaction, which results from giving the advice. Do they need a license? No. This person comes under an exception in Chapter 62802. This is not being an intermediary. This was incidental information in a non-insurance business, and you're not trying to get a transaction, and you're not being paid for the transaction. Next question. A person who places insurance, a person who places insurance for an insurance company or at a door-to-door sale, do they need to be licensed? Yes. This person is in the insurance marketing intermediary business and they are required to get a license. Next option. A person who advises other people about insurance needs and coverages and is directly compensated by an insurance company or the insured. I think you got it. Yes, this person would need to be a licensed agent and is required to obtain a license through the office. Next slide. So when we're starting with understanding the concept of insurance, some of the big pieces you need to understand are what comprises insurance. And this is a ultimately, we're talking about risk. So risk for insurance is the uncertainty of a financial loss. Risk tolerance is how much risk you're willing to take or wanting to take on by yourself versus what you can afford to give through the insurance company. So the insurance is defined as a transference of the risk, something I'm concerned that I might have, so an uncertain potential for a financial loss, so let's say a hospitalization, and how much can I afford? And how much do I want to pay to not be worried about all the bills? So if I pay an insurance company to take on the financial risk from me for a fee, then I have entered into a contract. Typically, the more risk I'm wanting to transfer, the higher the premium is going to be, because they're going to have a higher potential to have to pay. However, when you're looking at this balance, you're going to need to figure out where that sweet spot is. And when you join us tomorrow with the navigator, we're actually going to walk through some of these decision processes. So this makes a little more concrete examples. But to start with, there's a basic concepts of what elements are in a contract. An offer of coverage, acceptance. I'm going to accept that coverage, and in consideration, I'm going to pay you a premium. And I have an intent to contract. So this isn't just I had a loose conversation with you and all of a sudden the policy showed up, but rather this is a legal agreement that I'm saying, yes, I want this insurance. And I'm going to agree to specific terms, specific coverages with specific exposure for myself and what the insurance company is going to do. So the elements of a contract are offer, acceptance, and consideration with an intent to have that arrangement. Once you've entered that contract, it is enforceable. So one of the roles that OCI plays is in helping make sure that contract gets enforced in accordance with the terms of the contract. So reading these contracts is really important. So after if you're doing this kind of thinking in the health insurance world, after you've identified an insurer that is offering health insurance coverage that you might be interested in, you're going to want to start looking at the options and have a meeting of the minds. That means that you both, the agent that you're working with or the company you're working with and yourself, understand what's being bought. So as an example, you want the round plan and you reviewed the policy, the contract. So an insurance policy is a contract to ensure that you're going to know what you have to pay for your deductible or your cost sharing. And you understand at what point in time the insurer is going to pay for certain benefits. You're going to need to pay attention to networks and which form of healthcare is it? Is it traditional? Is it an HMO? Is it a EPO? And we'll go through that language more in our next session as well. You're going to need to know the full amount of money. So this is why we want people working with the consumers to be competent and trustworthy, because you're getting information that's very personal. How much can you afford to pay yourself versus how much can you afford to pay yourself and pay in premium and make it affordable for your family? The policy is going to lay out terms of coverage, exclusions, and limitations or restrictions. So those are unique to health. So you can think about your auto policy or your home policy, and those are fairly straightforward. You have some deductible movements, but when you come into the realm of health, there's a lot more moving parts, and we will walk you through all of those. Next slide. So insurance contracts are governed by our office, the OCI, and they apply to persons residing in Wisconsin when the policy or certificate is issued. So did the transaction occur here in Wisconsin? Or is the property normally located here in Wisconsin? or is the business operation here in Wisconsin? Any of those situations, and OCI is going to have jurisdiction, and the policy that's written for that is going to need to comply with those terms of Wisconsin law. We require policies to be readable, and unfortunately, it's a pretty high standard. The difficulty is we use what's called a Fleisch score, and to calculate that Fleisch score, it's looking at length of sentence, length of words, compound words, technical words. So think insurance and you immediately are in a technical world. And because of that, we lowered the reading level as much as possible in most products, but it's still pretty high. So think Medicare supplement products. We're dealing with an aging population with different levels of education and understanding. They need to just have their policies by rule be at a 50 reading difficulty level, which equates in the Fleisch world to fairly difficult reading level above a 16-year-old, maybe with some college. So we can only simplify certain documents down to certain levels, which is why when the ACA came and they came up with the table of benefit of summary of coverage, it was an attempt to bring things more understandable in a very complex document. The complexity follows in the actual policy, but there are some demonstratives that people can see that will be more clearly understood. When you give notice to an agent, a licensed agent, you're actually giving notice to the company, because the insurance company has authorized this agent to act on their behalf. So when you've said something to them, it's presumed that the insurer has that information. An insurer is bound by the acts of its agent when it's performed within the scope of that agent's authority. So an insurance company is not going to be responsible for a private sale of someone's boat, but they are going to be responsible if the agent sells an insurance policy but makes misrepresentations, or says the premium's a different level than what it actually is, or it broadens the actual scope of what's covered. The insurance company has to stand behind that agent because that agent is representing them. Privacy protections. I know a fair amount of your training through the federal marketplace that you have for navigators and CACs go into great lengths about how you need to protect information that you have. And in this contract, in contracting, what we're looking for is material facts. So if a consumer said they had, they needed to see a specific physician, and they wanted to be sure that whatever network they got in had that provider, and the agent said, yep, it's in there, and it's not, the insurer is going to need to make arrangements to try to get, not that they're going to get that covered fully, but they're going to definitely make changes so that that consumer can see that person or back out of that contract and get an opportunity to get into one where they can have access. So if an insurance company's agent who is bound to the company issues a policy or transmits the application to the insurer and knows a fact at the time that's not true, afterward, and the company learns afterwards about this misrepresentation, depending on in the time frame, the insurer may not be able to undo that contract. There is a window where they could if it's a material misrepresentation. So short-term limited duration policies have pre-existing conditions, and that's something you hear a lot about in the news. If you have you just had open heart surgery 2 years ago, and one of the questions is, do you have any heart conditions? And you answer no. That's a material misrepresentation for that, because that changes your risk. If you say, yeah, I do, to the agent, but the agent puts down no, that's an act by the agent for the insurer that the insurer is going to be responsible for. And the representations don't have to be in writing. They can be oral or in writing statements that cause the representations to be the basis of this contract. So misrepresentations by an intermediary in these statements is pretty significant and is something that the office watches and monitors regularly. And as navigators and CACs, you are often in the front lines, and you may hear stories from your clients that you're helping that say, you know, I was told by this agent that because I had surgery a couple years ago, I can never get health insurance. We'd want to know about that. And Eric later is going to talk to you about our complaint process. But you may hear that and you'll be able to say, no, that's not correct, and here's the correct information. Privacy of information, privacy protections are huge for our consumers, and they're protected both with their medical and their financial information. HIPAA gives a lot of protections, and the Gramm-Leach-Bliley Act, which is a sharing of information among company parts, is addressed within the insurance code and statutes. The administrative code requires that a licensee provide written notice of its privacy policies and practices to the insureds so that you are aware if they're sharing your information and how. And you get the right to waive those as well. However, with insurance and some of the work that you'll be doing, it's going to be critical that you have some of that information. And then you're going to have to protect the information that you have and accurately report it and carefully protect it. And at all times, consumers and any person in the public and providers can file a complaint with our office. And nobody can put a block up to you doing that. They can't threaten you. They can't say, oh, you can't do that, or you'll lose your right to appeal. It is inviolate. You can tell us anything and we will look into it. Whether or not we find an issue with a violation or not, we will look at it. And we get approximately 10,000 inquiries a year. So next slide, Eric. Adam is a polling question.
Yep, and Mike, are you able to do polling questions now or no?
Unfortunately, I actually did get a message from
can
the UW system that there
answer those
is
questions.
an outage right now. And so unfortunately, we are not able to do polling questions.
Okay, then Julie, go ahead and just read it, and then we'll give everybody a second to chime in chat if they want to, and then we will go ahead and tell them the answer. Does that sound good?
So is the time up?
Julie, can you hear me?
Yep. Okay, so
Okay.
the polling question that I see on the chat line, Adam, is from Medicaid presentation.
Yeah, can you hear me?
Tell me whether or not the polling question is live.
Can other people hear me? Okay, some people can hear me. Eric, Julie, I don't know, can you not hear me? Okay, well, for the
Sorry,
people who
Adam,
can't hear,
I'm trying to drop the echo. So can you repeat what you said? I had muted my audio.
oh, sure, can you hear me now?
Yes, thank you.
Okay, no problem. So what I was talking about with Mike, the polling question function of WebEx is having some issues that aren't going to be cleared up, I guess, this morning. So if you could go ahead and read the question, and then we'll just have as many people as want to chime in and chat with the answer.
Thank you.
Thank you.
So an insurance company is bound by the acts of its appointed agent when the agent acts within the scope of their apparent authority, even if they do not have actual authority from the company. True or false?
And it looks like most people are chiming in and saying true.
And I'm watching the chat, so I'm going to keep going until I don't see activity in the chat box. Okay. I think I saw almost everyone answer correctly. The answer is true. So if somebody has like let's use Blue Cross piece of paper, or they create their own and it looks like Blue Cross's material, even if Blue Cross did not appoint them as an agent, Blue Cross is still on the hook. So the answer is true. An insurance company is bound by the acts of its appointed agents when they act within their apparent authority. So they're not selling a boat, they're selling insurance. And even if they haven't actually been appointed, but they're using representations from that company. So the next slide, please. So within an insurance contracts continuing, there are going to be provisions that you see pretty universally, which is notice of a claim. So if you have a loss or you have something that you want to file, whichever line of insurance you're thinking of, you need to reasonably, as soon as possible, provide that notice to your insurance company. The policy may spell out certain timeframes. With health, it's typically within a year of the incident. And it needs to be sufficient so that the insurer actually has gotten it, and enough for them to be able to make a determination on what transpired is indeed covered by their policy. So this notice of claim or notice of proof is a requirement that has to be timely and has to be sufficient so they have enough information. Once the company has that, they need to promptly settle those claims. They can't sit on it just because they want to and they don't want to pay out claims. We're going to have problems with it. There are requirements that within 30 days of them receiving the sufficient information to make a determination, they need to decide and give notice of whether or not it's going to be covered or not covered. It needs to be a written notice if a written notice of a claim is not sent to the insurer, any partial amount of supported written notice is overdue if it's not paid within 30 days. So let's say they were waiting for one more note, but they had the bulk of the information. They have to act on that bulk of information within 30 days. If they fail to do that, the insurer, then there's a penalty. We're going to make them pay interest on what they should have paid. And the effects of a mistake. So I briefly mentioned that sometimes mistakes are intentional and sometimes they may not be. The legal effect of a mistake in an insurance contract, in most circumstances, unless otherwise provided, a general contract law applies to mistakes in insurance contracts. So in property insurance, a mistake in designating the person to whom the insurance is payable does not void the policy. Such a mistake is not a defense for an insurance company not to pay. But a mistake not listing an individual on your policy is going to be a material mistake. Next slide. So now we're starting to, when you have the contracts, some of the concerns are things that we're looking at. And one of the things, again, with these claim settlement practices is they can't be unfair. So examples of what would be an unfair claim settlement practice would be failure to promptly acknowledge an impertinent communication with respect to the claim arising from that insurance policy. You have to acknowledge that you have it. Failure to promptly provide notice of the right forms, or if you have instructions of something that needs to be given, or reasonable assistance to the insureds. You need to do that. So failing to do that would be an unfair claim settlement practice. You have to act in good faith to effectuate a fair and equitable settlement of the claim. Again, if you fail to do that, that's an unfair claim settlement practice. Each line of insurance has a different period of time for this right to return the policy. This is kind of your free look opportunity to make sure that what you understood from the insurance agent or from the website is truly what got sent to you in a policy form, and where most consumers have problems. So it's a pretty thick document that usually comes, but of all the documents that you really need to spend time with, you need to read this, and you need to read it when it comes in the mail, because you may have a very short window to say, hey, I really don't like this product and I want to get my money back, and you can. But if you wait too long, then you're not going to be able to hit this window of a right to return a policy. Grace periods are really more relate to your timely payment of your own premium. So under the, state law, if you basically get 31 days from when your premium was due to pay it before you get put into a grace period or that you're found to be late with your payment. For different types of products that might be a shorter duration, you may only get 10 days before your product gets put in abeyance. So if you are put into a grace period, they're going to pend the claims rather than pay them until you pay your premium. So this gives a window for consumers to make those payments before the insurer cuts them off. So if it's a day late, it's not good, but it's okay. The worst that might happen is if a claim came in that day, they may not process that claim right away because they're going to want to make sure you've paid your premium. Because remember, this is an insurance contract. They're going to provide coverage in exchange for you paying a premium. So if you fall short on your premium payment, they don't have to follow through on paying the coverage under the terms of the policy. So this window, you get a notice, you get a warning that you're late with your premium, you have so much time to send us a premium if you're intending to stay with us. Under the ACA, this time frame is slightly different depending on different classifications. And again, I will go through that tomorrow with our ACA presentation. Next slide. So these are all terms and types of products that you might have heard about. You might have heard that an employer is self-funding, and it may be a self-funded ERISA plan. And ERISA is a federal law that actually talks about retirement income and security, but it also includes health benefits. So if you are a Briggs & Stratton, you're most likely going to be self-funding your health insurance, and you're going to be governed by the Department of Labor. Labor unions and welfare plans are similarly situated. Discount plans, if it's truly you get 10 bucks off going to Walgreens, that's not insurance, that's a discount. And the Department of Ag, Trade, and Consumer Affairs is going to be regulating that. Medicare Advantage, which is their HMO kind of HMO model for Medicare rather than the traditional A and B, is governed solely by CMS. OCI only has jurisdiction over the acts of the agents who are selling the product, but the federal government has control of the rest of that. Similarly with Medicare Part D, which is the prescription drug component of Medicare. Health sharing ministries are popping up, and you might be hearing about them in the news. It is the original GoFundMe for health insurance. And in Wisconsin, we do have an exception for the ability for people with similar faith or similar denomination agree to financially help each other out with bills. The member is required to pay any medical bills first. This is not insurance when they follow this exception. And then they can post in a weekly publication, this entity that's helping coordinate, asking for assistance to donate money to help pay these claims. Unfortunately, sometimes these plans are not following that exception and actually are doing more the business of insurance, and that is something the office is watching carefully. But frequently, you are hearing more about these, and under the ACA, the feds decided that that could be part of your minimum essential coverage requirement, so you would not pay a tax penalty. We will be talking more about those, but I just wanted to put that in your mind. And the last one is direct primary care. And this again is kind of reemerging. So providers are getting tired of dealing with insurance companies, as most of the lingo that you hear, or to make your life more easy, you can see Dr. Smith anytime you want, and Dr. Smith is going to provide and a physical and get you in the next day, but you're not paying for the transference of the risk for your care because it's defined what they're going to provide. Again, these last two can walk a pretty fine line of being not insurance and tripping over to being insurance, which is why the office does watch this carefully. Next slide. So marketing practices. Again, the ultimate goal for the office is to keep this level playing field, to make it fair to enter contracts freely, and to make sure everyone has fair rights to get insurance that they want at fair rates. So to try to facilitate that, we make sure what's fair in marketing. So an unfair marketing practice would be making a misrepresentation, saying that the product does something it obviously doesn't do, or providing an inducement, big shiny thing, we'll give you, $50 if you come sign up. Well, you can't do that. Or be discriminatory. Insurers and agents cannot be discriminatory in marketing their product. Historically, you might have heard about this, and most recently with COVID, there is a disproportionate number of people who are falling through the cracks. And it cannot be because someone refused to sell them the product, because that would be unfair. They cannot unfairly restrict contracting. They cannot throw in extra charges. That would be unfair. We spoke a little bit about misrepresentation, but what we're talking about here is misleading information or information that tends to lead you to not understand the product or is actually false. So information that is misleading because of incompleteness. Oh, I kind of forgot to tell you all the exceptions. I only told you where there is coverage. I didn't say it's from one doctor. So that would be incomplete information. Filing a report with intent to deceive the person receiving that report. So for us, it would be like an application. If you took the person who said they had open heart and you filed that they didn't, that would be filing a report with intent to deceive. Failure to make a proper entry in a record or concealing information. Those are all unfair marketing practices. When we talk about constraint of competition, so again, this big level playing field, it's illegal to say, oh, so-and-so's out of business, you need to now move to ABC Insurance Company. That's just flat out false. Or you can't intimidate somebody or say that you can only get insurance from this one carrier. So restraint, it's illegal, contrary to our insurance code and laws, to commit or agree to commit any act of boycott. So you can't get among yourselves as navigators or CACs and say, we really hate ABC Insurance Company. So when consumers ask us options, we're just not going to mention that one. You can't do that. You need to show all the options. You're the neutral giver of information. Consumers get a choice of insurer, which goes to what I was just saying. They get to choose. So as long as they have options, they get to see what options are available for where they live. And we want to be sure that that keeps it fair for all insurers. There has to be, a person who's requiring coverage can reserve the right to disapprove on unreasonable grounds a policy or insurance company that got selected for them. So let's say your company's going out of business or is leaving the marketplace and you're getting replaced with XYZ insurance company. You get a choice to say, yeah, no, I don't want XYZ. I'm going to wait and think about who I want instead of being automatically moved. So we do have rules about unfair trade practices, which again go to actions that are misleading or deceptive or unfairly discriminatory, because we want to keep competition fair. Home solicitation and sales have a whole nother level because you're now entering someone's home and the balance shifts. And what we get concerned of at OCI is being sure that we get that people are treated fairly and are not being coerced. So there's a whole bunch of rules, and they are in the intermediary's guide for insurance, as well as Navigator and CAC requirements. Next slide. Again, marketing practices, advertisements need to be truthful. They can't be misleading. They can't be disparaging. They can't scare, the intent can't be to scare you, like you're missing half of your benefits because you didn't apply right, when what the tagline actually is a different company. You can't print material that's false. You can't be misleading in what you're saying. So an advertisement is any printed or published material, audio-visual or descriptive material or literature that's used or prepared for the purpose of obtaining a sale or selling insurance. It can be social media. So we've been watching Facebook sites and Twitter feeds to make sure they're being honest and fair. And they cannot be unfair or incomplete comparisons of policies. You have to, if you're going to compare yours ABC to XYZ, it needs to be fair. It needs to be honest, and it needs to not discredit or criticize the competitors. So next polling slide. So your thinking hat's back on. Which of the following are not considered insurance? Health sharing ministries, self-funded ERISA plans, Medicare Advantage plans, or D, all of the above. And I'm going to watch your chat box. Okay, great. Most of you have answered all of the above. And I think that those of you who are answering A may be because of the ability for health sharing ministries to cross the line into insurance. When they are within their exception, they are not insurance, which is why we would say they're not considered insurance when they're done properly. Self-funded plans are regulated by DOL. Medicare Advantage is by CMS. So the answer for this poll is all the above. Next slide. And these are just common words that you've either heard or seen, and I'm just going to fly through them. There's more information at different points, and this is just something I want you to, when you hear these words, you have something to pin it back to. Medicare is Title 18 of Social Security Act. It's for people over 65, people who are under 65 with certain disabilities, or any person with end-stage renal disease. ERISA stands for Employee Retirement Income Security Act. It deals with employer retirement plans and continuation of health benefits. COBRA is a Consolidated Omnibus Reconciliation Act of 1985. HIPAA is Health Insurance Portability and Accountability Act of 1996. And the PPAC is the Patient Protection and Affordable Care Act. And I'm going to hand off now to Eric.
Thank you. Okay, the next slide that we have up is timely payment of claims. And there is a requirement that once the insurance company has all the documentation that they need, that they need to act promptly at that point. They can't just sit on it and not make the payment. So as you can see from the slide, the insurer can require sufficient documentation necessary to make a determination of liability. Consumers need to and have the responsibility to provide additional information to their insurer in order to facilitate payment of the health claim. And the policy will identify the time frame consumers must file a claim or provide information for payment. So a lot of times when there is a delay, it can be attributed to consumer or provider inaction with getting the necessary documentation to the insurer. But as I said, once the insurer has all the necessary documentation, the onus is on them to act as promptly as possible. Next slide, please. Non-renewal of insurance. Non-renewal of a policy refers to the termination of a policy at the expiration date. If an insurer decides it does not want to renew your policy, it must mail or deliver to you a non-renewal notice at least 60 days before the policy expires. The reasons listed can be for non-payment of premium, fraud by the consumer, failure to meet minimum participation or employer contribution requirements. The insurer ceases to offer coverage in that market or area. For network plans, when no enrollees under the plan reside, live, or work in the insurer's service area. So if the insurer fails to provide notice at least 60 days prior to the expiration date, it must continue your coverage under the terms and premium of your prior policy for the term of the policy or 1 year, whichever is less. That's Wisconsin Statute 631.36 sub 4. If you happen to be non-renewed solely because of the termination of your agent's contract with your insurer, the insurer must continue your coverage if you request the insurer to do so in writing prior to the expiration date and you meet the insurer's eligibility requirements. And that's pursuant to 631.36 sub 4 sub 8 of the Wisconsin statutes. So the overall message here with non-renewal of insurance is that if you do get mail from your insurer, it's extremely important to open it. It could be a non-renewal notice. Next slide, please. Next slide is timely notice of cancellation. This discusses statute 631.36 sub 2 sub B of Wisconsin statutes. And specifically, it provides that no cancellation is effective until at least 10 days after the first class mailing or delivery of a written notice to the policyholder. The Court of Appeals of Wisconsin has addressed this issue. The concern over regarding the timeliness of the notice that is required prior to the cancellation of coverage. And again, the overall message here is you need to tell your clients to open their mail. If the insurance company does what they're supposed to do by way of mailing and delivery, it's not an excuse if the insured says they simply never saw it. Next slide, please. Now we're going to move into complaints. OCI fields complaints from consumers and providers are typically the greatest source of complaints that we receive. It deals with issues involving insurance companies or insurance agents. So if someone's having a problem or an issue with an insurance company or an insurance agent, they may file a complaint with OCI, and we in turn will look at that complaint. We ask the following questions that are listed there on the slide. So our main concern is consumer harm and to make sure that the company and or agent has complied with Wisconsin insurance laws and regulations. But you can see the questions that we ask ourselves: did the company identify the problem in their response to us? Was the company's action proactive? Was the consumer made whole? And was corrective action taken by the insurer or agent? Our main goal is to make sure that the problem has been fixed. So when we receive a complaint, we never want to see that same problem continue with a company. So we always examine the situation, consider those questions that are listed there on the slide, and then we process the complaint. And our main goal is to make sure that others are not affected by the same problem or issue moving forward. Moving on to the next slide, issues based on the source of complaint. As far as that goes, OCI encounters issues sometimes with the source of the complaint. So trustworthiness and reliability are concerns, along with the accuracy of the information. So for instance, self-interest may distort what factually occurred. So we are looking at who fills out the complaint, because sometimes a provider might fill out the complaint for the consumer, or an agent may fill out the complaint for the consumer. And there is self-interest at play there sometimes. For instance, the provider might want to get paid, which is why they're filing the complaint, or an agent may be competing for that consumer's business. So they say, we're going to help you out. So they do have self-interest there. So we do have to read those complaints and make sure that this is truly in the interest of the consumer and not some peripheral interest that may be taking place here. Next slide is OCI complaint information. We provide this information to everyone who is going to file a complaint with us or thinking about filing a complaint with us. It discusses the time limits or approximate time limits of 25 days is when you should hear from the company or agent. Sometimes when a complaint is filed with their office, resolution may occur even before we examine the response from the company. The company oftentimes or sometimes does in fact work it out with the complainant, and that results in a resolution before we even have to do our examination sometimes. But the one thing to stress here is that the OCI determination, whatever we may determine after reviewing, never precludes a complainant from pursuing the matter further with an attorney or through the court system. They always have that right to do that regardless of what our decision is. Next slide, OCI complaint information. The company must follow Wisconsin insurance laws and policy provisions. What we always do when we get a complaint is we look at it to make sure that laws and policy terms are followed. And if they're not, that's when we will intervene. Another function that we perform when processing these complaints is to make sure that the consumer understands their insurance policy. Sometimes policies can be extremely complicated or unclear. We explain those provisions to the complainant, and a lot of times that clears that up in the mind of the complainant, and they understand why, for instance, why a claim might not be paid because it could fall under an exclusion. So that we always try to explain that. And as you can see there, insurance companies and agencies have 20 days to respond. Slide 29, what OCI can't do. We can't act as your lawyer. We can't make medical judgments. We can't establish facts surrounding a claim. We can't determine the value of a claim. We can't address issues we can't legally enforce. We can't tell a company to pay a claim or refund a premium. And then that last bullet point talks about Wisconsin open records law. So we always give these parameters to complainants to be as transparent as possible and to hopefully help the complainant to not have unrealistic expectations of what OCI is able to do for them. Next slide.
So this is just resources that are available, and I know that our time is up. Adam, did you want me to answer the one question about choice of insurer?
That would be great. Yeah.
So to be clear about choice of insurer, when you're talking with consumers and they live, let's say, in Dane County, if they're looking for insurance coverage, you need to be sure that they're aware of all the different options that they may have that meet what they've given you for specifications. So if they only want to have to use a certain set of providers, let's say UW, there are multiple insurers that have UW providers. But if all they want to see is a Dean provider, that's a closed panel, it's okay to show them Dean Health Plan and SSM, but they need to be aware of the other, just that there may be other options. So you can't just not talk about Aetna or just can't not talk about Cigna because you don't like them, but you need to present options that are available in that service area. Some parts of our state, there's really only one or two carriers, and then those are the options the consumer should see so they can make the best decision for them.
It's a good question, though, honestly, because it's one of the things that's going to come up as you're assisting people, showing them all of the options in their area. Because honestly, there are a bunch, and it's going to be your job to help them determine of those which is the best one for them. And we'll get more about that in coming sessions.
So I think you have a break coming.
Yeah, we have about a 10-minute break. It is 11:27. So if we jump back on right before 11:40, give people a chance to stretch their legs, I can switch presentations, and we should be all good. All right, I'm going to stop sharing. The next one is it health insurance in Wisconsin? Is that what it's called? Health Insurance 101? Is that the same thing? Okay, excellent. I'll see you guys very shortly.